Cash flow is nothing more than the net result of the money that comes into your organization less the money that goes out. The less money that goes out, the better your cash flow. If you aren't keeping a close eye on your accounts receivable, you're missing a terrific opportunity to improve your cash flow and the health of your business. No matter how much you love your customers, and businesses do love their customers, some of them invariably don't understand how important it is to you that they pay their bills on time. A day or two late usually isn't a big deal. A month or two late always is a big deal. As soon as your customers get into the habit of paying late, getting them to pay on time can be almost impossible. You have to identify your late payers as soon as you can, and then take steps to get them to pay promptly. If you don't already do so, requiring payment on delivery or even in advance will definitely be worth your while. Make this one of your company's standard policies, and don't apologize to your customer for requiring payment before you start work. We can think of another situation that's even better: getting paid in advance. Many businesses require deposits, retainers, and other forms of advance payment as a normal part of doing business. If you've had an addition built onto your house or new windows or roof installed, you know that building contractors often require deposits before they start to work. Have you noticed that most online stores require customers to provide payment at the time of transaction, and that they generally ask consumers to pay with credit or debit cards? This isn't an accident. You'll not only get more sales if you accept credit cards — don't forget, credit cards aren't really money, right? But you'll also get your money more quickly than if you simply send out invoices. Note: extensive research by the credit card industry shows that companies that accept credit cards enjoy up to 40% more sales than those that don't. You'll have to pay your credit card company or bank a fee for the privilege. Fees vary widely from provider to provider. Be sure to shop around before you sign up for a plan. But most companies have found that the additional sales generated and the enhanced cash flow more than make up for the fees. A number of online payment services are available that accept credit cards from customers on your behalf, and then deposit the funds for your products or services directly into your bank account. Perhaps the best known of these services is PayPal. PayPal and similar providers charge fees of their own, but the charges tend to be lower than what you'd pay through a bank or other credit card processing service. Every invoice has a due date. Whereas some businesses may require payment 30 days after delivering an invoice, others may require payment in only 15 days or less. Why do they do this? Because they want to make sure they have healthy cash flows. Of course, the idea is to make sure that you take care of your company's cash flow first and worry about someone else's later. How do you do this? By holding on to your money as long as you can. By waiting to pay until payment is due, you'll have the benefit of your cash longer, and you'll positively impact your cash flow. Now, don't get us wrong. You should always pay your bills on time if you want happy vendors and if you want to avoid pesky calls from bill collectors. Don't make a habit of paying invoices after they're due. But we also advise that you don't get in the habit of paying your bills sooner than you have to. Before you send out your invoices, make sure that they're absolutely correct. Check to see that the items provided and the quantities are correct. And while you're at it, make sure you have them addressed to the right place and the right person. When invoices go to the wrong places or people, they tend to sit around unpaid, or worse, quickly find their way into the trash. If you want to get paid sooner rather than later, and we're sure you do. Double-check all your invoices before they hit the mailbox. Many companies simply reject invoices that have mistakes in them. Believe it or not, they won't call you first to ask why you've made the mistake, and they probably won't send you an email asking for clarification. They'll simply reject the invoice. And if an invoice is rejected, it won't be paid, and it may not even be returned to you. After all, the company you invoiced also is taking advantage of a preceding tip. Don't pay sooner than you have to. And by sending an incorrect invoice, you're giving the business an easy way to extend the payment time without breaking the rules. You give a prompt payment discount when you allow a customer to decrease a payment by some set percentage, say 1%, for paying an invoice within a specific period of time, usually 10 to 20 days. Offering a prompt payment discount to your customers can be a powerful incentive for them to accelerate their payments, thus improving your cash flow. In many cases, this positive impact on their cash flows exceeds the small amount of money the companies lose in extending the discounts. Tip: prompt payment discounts can allow you to experiment and have fun. First, start with the standard net 30 payment terms. All the money must be paid within 30 days. And analyze the average time your clients take to pay. Next, offer a minimal prompt payment discount to your clients, perhaps 0.5% for 20 days, and see what happens. Be sure to publicize the discount prominently on the invoice so the right people notice. Does the average time your clients take to pay change? As soon as you hit on the right combination of discount and time, stick with it and watch your cash flow improve. If you decide that you've waited long enough for payment, don't be shy about following up on it. You can follow up in a few different ways, each one down the list a bit more serious. By note: if the amount owed isn't very much and the invoice isn't long overdue, a friendly note on a copy of the invoice may be sufficient to motivate payment. By email or snail mail. If the payment is dragging on and you want to get more serious than a simple note on an invoice, you should send an email message or a letter to your customer specifically requesting payment. By phone. When your patience has run out and you want to head off a potential payment crisis, the most effective way to encourage prompt payment is to personally pick up the phone and call your customer directly. Be respectful but firm. The sooner you follow up on late payments, the better your customers will understand that you make prompt payments a priority, and the more likely they'll be to pay on time in the future. One way to reduce the amount of money that flows out of your organization, which improves your cash flow, is to manage your expenses. Only spend money if you absolutely have to. Think you need a new computer? Why not try to get another year out of your old one? Or maybe you can upgrade the motherboard for a small amount of money. Perhaps you can find an inexpensive, used but more up-to-date computer online and a site such as Craigslist. Here's one more component of managing your expenses: projecting your cash inflows and trying to match them with your cash outflows. This money management can really pay off. For example, if you expect a big payment from a reliable customer 2 months from now, you should defer all possible expenses until you have that cash in hand. That way, you'll avoid the dreaded cash crunch that can occur when you spend more money than you have available.